We're still very early in this long-term bull market.
It's one of the biggest growth sectors of the entire year.
This one's almost 7x, almost 600%.
But is it possible for these rare earth metal stocks to continue rocketing even higher?
These news cycles that you see are going to cause huge volatility. You'll see it in the price behavior before you see it in the news.
Chris Rowe with True Market Insiders shares what's driving these metal stocks so high.
All of a sudden, the stock's trading 200 million shares in one day.
And what retail investors should be prepared for in this sector moving forward. Chris, so great to have you back on the show talking about one of the most exciting sectors in the market right now, and that's those rare earth materials or the metals sector. We've seen so much movement in these stocks, and now today, a new headline's coming out about China making some accusations against the U.S. for kind of creating some panic in this market. We're going to address those conversations later on in this video. But first, I want to just look at this sector a little bit and some of the biggest movers we've seen out there. There's a lot of movement in these stocks, Chris.
Thanks for having me again, Bridget. Great to be here. So if you look at the non-ferrous metals sector, and this is a sector that we narrow down the stock market out of 45 sectors, we find that the metals non-ferrous sector is typically the strongest or maybe the second strongest sector out of 45 groups. And it is where we're seeing the biggest gains since the crash low. I look at the stock market as resetting anytime you hit a market crash low. So we're in the very early stages of a bull market, clearly being led higher by the metals sector.
Yeah, some of these gains in metals have been absolutely wild, hundreds of percentage gains in just a few months. Let's talk about some of the names that you've seen get the highest gains so far in this sector.
Well, of course, there's TMQ, Trilogy Metals. You could see that since the crash low, this one's almost 7x, almost 600%. One that's been in the news lately is MP Materials Corp. The symbol is simply MP. This is a Canadian mining company that the United States took a 10% stake in, causing that stock to absolutely just gun higher. TMC, which is basically TMC, the metals company, another symbol in this sector. Now, the funny thing about these stocks in this sector is that they look like they've come too far too fast. With these stocks, a lot of people will look at the charts and say, oh, this stock went from 1 to 15 very quickly. It's probably a bad time to buy it. But we're still very early in this long-term bull market in this sector.
That's an interesting prediction on these. I think that is one thing retail investors see a lot is when you see gains like this, everybody thinks this is the top end of the sector. You still think this sector and the specific names you mentioned have room to run? Why is that?
Purely from a technical perspective, that's where we kind of start and finish our analysis. Let's just take a look at TMQ, for example. You could see that this stock seemed to have just gone parabolic. It just seemed to have gunned higher. But if you look at the level of volume that's come into the stock when the stock took off, this is a stock that used to trade about 500,000 shares a day. All of a sudden, the stock's trading 200 million shares in one day. Let's go to MP. Again, you can see that the stock absolutely gunned higher. Usually the stock was trading something like 5 million shares in a day. I'm going to zoom in here. And you can see it breaks out on 86 million shares. These are stocks that are trading 10, 20, 30, 40 times the average daily volume on the breakout. And then you can see it has a nice solid base. The bigger the base, the bigger the breakout. You can see it traded in a very tight range, broke out from that range again. And again, you can see they're coming back with big volume. That means lots and lots of shares are being bought, overwhelming the sellers. It means the stock's being forced higher. If there's no volume behind that upside move, it's just that the bearish investors are allowing the stock to move higher before they come in and start selling and nailing that stock. The opposite is happening here. Big volume on the breakout means it's being forced higher. Anybody who's selling stock is just running away and pulling back their offers because they see that the bulls are charging ahead, looking to buy more shares in the stock. This rally is far from being over. MP is still a strong buy, even after running from about 20 up to nearly $100 a share recently and pulling back to 86.
Yeah, such an interesting sector to watch. It seems like there might be some risk out there for investors too, so I want to talk about that in a minute. But first, I want you to share a little bit about the tool that you have that really kind of flagged this whole sector is this bullish run-up even before it started to really hit the headlines.
First of all, everything that we do starts with an algorithm. We just scan the entire market. We monitor the price behavior of every single stock, every single second that it's trading. And we launched this new algorithm pretty much near the crash low, right before the market bottomed out. And I highlighted in orange anytime the alert was a precious metals sector alert or a non-ferrous metals sector alert. You can see it also alerts the stocks that are the strongest within that sector. And as I scroll down here since April, you can see that there's a lot of highlights of metals sector trade ideas, especially most recently. You can see this is August 27th, and you can see almost every idea that's been alerted to us by the algorithm has been precious metals or non-ferrous metals. Now I'm going to adjust this so that we're organizing it from the biggest winners on down. And you can see when I organize this from the biggest winners that we've seen on down, most of them are highlighted in this sort of peach color. So what it does is it basically tracks 45 sectors of the stock market, and it finds with specificity how much urgency that these sectors are being bought with. So when institutions are buying a stock or buying a group of stocks, they could either wait and gradually buy that group of stocks over time to try to get the best price possible. But if they have a high level of urgency, they're not concerned with what price they pay. They'll buy stocks at 2, push it up to 4, push it up to 6, and push it up to 12, just because they're prioritizing getting their money into that stock over getting into that stock at that lowered price. But if they're willing to buy so much stock that it pushes a stock from 2 all the way up to 12 in the matter of a few weeks, that tells you something. That tells you that they think that that stock's going to trade a heck of a lot higher. So that's what we saw in stocks like MP. Stock went from the single digits, low single digits, up to $20. Our algorithm detected it here at $24. Very hard for people to bring themselves to buy a stock that's trading in the low single digits, ran up to 20. But then you can see that there was so much follow through that it pushed the stock as high as $100, now sits at 86, max gains 313%. And I also want to point out that since launching this in April, I'm organizing this with the biggest winners descending on down. And you can see that most of them are highlighted in peach. Most of them are metals stocks, metals sector. So you want to go in and you want to focus on this group for the biggest winners that are going to probably continue to be the biggest winners through the end of 2026.
Yes, such an interesting sector. Like you said, those gains really speak for themselves. I love this tool that you have because it gives really great ideas on which sectors to follow and then which stocks within those sectors to follow. If you want to check out Chris's tool and his algorithm, we have a QR code here you can scan or a link for you in the description of this video. It is a really interesting information, especially if you are a numbers person and you like to see what is happening in the market, these volume plays like Chris is just talking about. Now, you've given us some predictions on where you think these metals could go in the future, but let's talk about the risk. I think a lot of retail investors are looking at these going, there is way too much volatility here for me to want to get involved at this point in the game. What kind of risks should you be prepared for if you do decide to buy into metals where they're at right now?
Well, the biggest gainers of the future tend to have the biggest volatility in the beginning of their uptrend. So if you want to be in the long-term biggest winners, a lot of times you're going to have to weather a lot of that big volatility. If you think about stocks like Amazon, some of history's biggest winners, you know that stocks like that traded from 2 up to 20, down to 15, up to 30, back down to 2 before they went off and made their giant moves. So short-term traders that are willing to incur this kind of volatility can ride those short-term uptrends and be done with it. When you sell out, you take that nice profit if it's profitable. You have to decide where you're going to limit your losses. But just keep in mind, when you get into these big winning long-term, historically the biggest winners, you're going to have to weather some big swings to the upside and to the downside. This is metals. They tend to be highly volatile. You never want to risk more than you can lose on a trade. But if you want to get those big multipliers, if you want to get those 5x or 10x returns, you're going to have to be willing to incur some of those 50% drawdowns before that happens.
Now, you're talking about these for traders and people who are willing to make those different swing trades and things like that on these stocks. But what about long-term investors? Are these stocks you want to look at for the long term to buy now and keep in your portfolio for the next few years?
Buying into the metals and miners companies, a lot of the time, it's a backdoor into the technology sector and the growth of technology. To build chips, which is the fastest growing part of the technology sector, you need these rare earth metals mining companies that are in there. There's a reason the United States made a 10% investment in one of these companies. It's not because they want to invest in metals and just hold those metals as some sort of currency. It's because these are metals that are used in chips. And a lot of these chips are not just for your phones and the cool technological devices that we have. It's also for some of the most powerful weaponry that the government is spending money on. So there's going to be high demand for it, whether it be for cool technology or whether it be for let's call it national security. One way or the other, they're willing to pay top dollar. If you think about what the biggest percentage of a government's budget is allocated towards, it's allocated towards defense. It's allocated towards military. And we've seen the global superpowers across the board increase the percentage of their money spent on military equipment. So there's a big focus on metals because of that. Semiconductors, being the brains of technology, need these materials, need these companies. So if you're looking at buying technology, if you think technology is going to continue to expand, growth, evolve, then you want to be in these rare earth materials miners stocks.
Well, speaking of world superpowers, let's get into that discussion on what is moving these metal stocks so high right now and address that headline coming out just today of China kind of accusing America of helping to manipulate this market a little bit and causing some panic in the rare earth metals market.
Yeah, well, China's basically withholding some of the exports, and United States is saying, okay, well, we're going to charge 100% tariffs on China starting on November 1st. So there is a deadline. It's very dramatic. I also want to point out that it creates great buying opportunities. If you think back in 2018, Trump imposed tariffs on China. It was during a year that was already a weak year. A midterm election year tends to be weak. Knocked the stock market down, created a great buying opportunity at the end of the year in 2018. Then again, obviously the market crashed this year, and Trump came out and just told everybody, hey, the market is down. It's a great buying opportunity. He knows that he's created what's called a wall of worry. He's a negotiator. He comes to the table and he talks tough, and a lot of those things get removed. So when you have something that seems to be a trade war, something that really has scared individual investors, had them running for the hills, had them selling their stocks, had them afraid to buy when markets are at some of the historically the best buying opportunities you'll ever find, just remember, what they're creating is a wall of worry. They're creating dark clouds to be removed. And when those dark clouds are removed, the sun comes out. That's when stocks absolutely gun higher. So you see some stocks that have traded, some of your favorite stocks, from $6 to $12 to $25 a share. When these trade talks get tough and it causes markets to pull back, and you see those stocks pull right back down to 10, that oftentimes can be your buying opportunity in these highly volatile stocks.
Do you think we could see more of those downswings in this metals market?
I think you can, and I think you will. I think it's a gift that's being given to us, and I don't think we should look a gift horse in the mouth. I think we should take advantage of those big downswings. It's a big downswing for the market in general, but remember the sector within it, the metals sector, is a very volatile sector. It's notoriously volatile, and it has very small companies that can have big downswings and big upswings. So I think it's kind of a gift when you're a big, strong bull market across the globe. They're basically abandoning global currencies. The biggest investors are putting their money into assets, into real estate, into metals. Even central banks now, instead of just buying gold, are also buying industrial metals. So you've got a bid behind these industrial metals for reasons of technology, for reasons of abandoning currency and having a place to store that value. It's pretty much all systems are a go for metals. So when you create a very volatile market with a big downswing within the middle of a big bull market, you're now able to buy one of the most volatile sectors that participated in that downswing in a big way. And it's also a sector that's a very bullish sector in the long term. So you kind of have everything working for you.
Yeah, this sector is so interesting. And we talked about a lot of factors just because of the momentum happening, the volume happening in this area, the different geopolitical issues happening. I'm wondering if it's important to also look at, when you're looking at these individual companies, are we looking at any fundamentals, or are we just ignoring the fundamentals and getting onto the momentum with each of these companies?
It's like we say here at True Market Insiders every single day. You'll see it in the price behavior before you see it in the news. You'll see it in the price behavior before you see it in the fundamentals. Somebody always knows stock market's dominated by insiders and institutions. We look at what institutional investors are doing and what insiders are doing with our algorithms. We worry about the story and the fundamentals later.
It's a really unique way to look at the market. And if this is something that you are interested in, again, I've got a QR code here and a link where you can go and check out Chris and his True Market Insiders and exactly the kind of information and the triggers that he's talking about right now. Chris, thank you so much for diving into this sector a little bit more. It is one of the most interesting areas of the market right now, and this conversation was great.
Thanks for having me again, Bridget.
Yes, thank you for watching, everyone. Let us know what you think about the metals market right now. Is this too risky for you? Have you already made a lot of gains in this area? I'd love to hear from you in the comments. Thanks again for watching, everyone, and as always, happy investing.